What kind of headwinds do I see in the economy that leads me to call a recession starting Q1 of 2024? I think there's five of them that we need to talk about. We can talk about the CEO of Citigroup is saying. We'll talk about the UAW strike. We'll talk about institutional buyers. Lots of stuff to talk about. This is the daily financial news for Saturday, September 29th, folks. Let's get into it. Let's talk about why I'm calling recession. I really think there are five significant headwinds that we need to at least acknowledge. One, the national debt is over $33 trillion and going higher. That eventually is going to become a problem. We have debt being refinanced and rolling over. I think a third of our debt rolls over in the next 12 months. It will be at much higher rates. We have the need to start paying that down. Does that mean taxes go up? Probably. For who? Everyone. We have oil, being a problem, quickly heading above 90, potentially over 100. The U.S. government needs to refill the Strategic Petroleum Reserve. That's going to be impactful. We have strikes, and we not only have the UAW strike, we have the threat in Vegas. We now have Kaiser and many, many more, I think, coming. We have student loans starting up on October 1st. Right? Student loans have to be repaid. And we have mortgage rates up at 8% for lots of borrowers, sending the real estate market into a deep freeze. It's just going to be hard. I do believe Jerome Powell is done raising rates, but I also believe he's not cutting rates next year. So there's just a lot of companies that have to refi at higher rates. There's a lot of individuals that if they do refi will be at higher rates. It's the zero rate interest is over. And I see the lag effect of 525 basis points finally catching up. I think pending home sales being down 7% is the first sign of economic data getting worse because of high interest rates. That's my opinion. That's what I think is coming. I think we need to talk about what happened on Friday. Friday, we got a PCE reading that was a little better than expected on core. We did see interest rates take a pretty noticeable drop. They went down 16 basis points in a day, which is a pretty big move. But what we did see was the spread. Remember, the spread between the 10-year and the 30-year mortgage has been above 300 seemingly all year. It's now at 286. Have we broken that 300 basis points? Are banks now trying to generate business because rates are so high? Are they getting competitive because nobody is borrowing? Maybe. There was an interesting article in Business Insider. Business Insider on Friday wrote an article where UBS was referenced. Real estate bubble risk dwindles across the world. Specifically, New York, Boston, and San Francisco markets are seeing affordability return, actually reducing the bubble risks, which I thought was pretty interesting. RFK Jr. is out talking about 60% of homes being owned by institutional investors by 2030. That is a wild headline, one that I've heard many, many people repeat. I just want to dig into the math behind 60%. Did you know, according to Statista, which is the data from September 4th, so relatively recent, less than a month ago, there are 82 million single-family homes. 82 million single-family homes. It is estimated that institutions today own 3%. So 3% of 82 million is what? 1.8 million? Is that right? 2.4 million. Yeah, 2.4 million. So they own 2.4 million of 82 million. So if they're going to get 60% of 82 million, They need to get to roughly 50 million homes in the next 7 years. Folks, there's no mathematical way that happens. If we do 4 million transactions a year and institutions buy 100% of the homes, they're going to buy 28 million homes. That's just math. They own, let's call it 3 million today. We do 4 million transactions a year. They buy every single home. That's 7 times 4 is 28, plus the 3 that they own. That's 31 million. 31 million is not 60% of 82 million. So it is mathematically impossible for institutions to own 60% of single-family homes by 2030. It's mathematically impossible. I don't understand. That said, I do want to be clear, institutional ownership of single-family homes is going up. I would even argue it's a problem. But let's not get hysterical and talk about things that are mathematically impossible. You can't go from 3 million to 50 million in 7 years when we only do 4 million transactions a year. It's mathematically impossible. I agree it's a problem. I agree they're competing with homeowners. I agree with all of that. But let's not use things that are impossible to have this basis of discussion. It's just not okay. The other thing I've heard a lot about is, will institutional buyers become sellers? Think about that. Institutional buyers were buying single-family homes with 6, 7, 8, 9 cap rates. Is it fair to say that cap rates are lower today? Absolutely. Would institutional buyers become net sellers? I would argue they already are net sellers. Now, if they're net sellers and you're telling me they're going to own 60%, how is that possible? I don't know. Doesn't make sense to me. But again, it is a problem. And it's something that I think is going to take an act of Congress to make a big fat no-no, but we shall see what happens. At the end of the day, folks, this is the daily financial news for Saturday. I think it was September 29th. I hope you have an amazing day. Like, subscribe, comment. Remember, we do the daily financial news live 5 days a week. We also do a best of ORAT, which is something we take one video and load it up, the best of ORAT videos there. So, folks, have a great day. Bye.